I want to start with this China story on Treasuries. Not a big market reaction. Are we going to get a bigger one as this story develops?
Yes, I think this is a real grower of the story. I understand why there's not been a panicked reaction. This is China warning banks to basically watch out for their concentrated exposure to treasuries and trim where it's excessive. Not for state banks. It is really just a kind of warning to the market. And it happened a couple of weeks ago. So it's during kind of the Greenland fiasco. So it's kind of understandable there's not been a panic. And that's right. But I think this is another notch in the idea that the world owns an awful lot of treasuries. The US government is seriously indebted and is funded by the rest of the world. And given the international policies of the US administration right now, people are increasingly nervous about those holdings. We had, Danish pension fund talking about reducing exposure a couple of weeks ago. This is another notch. And I think as we get more of those notches, you get a game theory situation where no one wants to be left holding the bag. And so I think this is potentially a very big story. I'm not expecting a bigger panic suddenly today, but I think it's a confirmation that we're going to continue to see US yields drift higher because of that concern that people have too much US Treasury exposure.
Mark, let's pivot to Japan, where we are seeing a lot of market reaction. Certainly stocks really strong, up by 3.9% on the Nikkei, for example. We see the yen bouncing. It's been really volatile, I know, through your session, through the Asian trading day. What difference does it make, the strength of the win for Takachi here?
Yeah, I think this is really massive, a super majority, and I think Takachi can do some really immense things here since they can override the veto from the upper house. So I think people are underestimating how far the Takachi trade can go. Now it's obviously difficult to trade because one instinct is to kind of sell the yen, but you're worried about intervention risks. So tactically, that's very hard. But I think the idea of yen, the 6-year bearish trend on in the yen is sustainable. Now it might be more on crosses than versus the dollar, but I think that's the long-term trade over the next couple of years over Takachi's term for the next few years is sustainable. I also think JGB yields have higher to go, and I think it's going to be very pro the Japanese economy from a very low base, but I think it continues to be good for Japanese stocks. So I think all the themes of the Japanese trade that we've seen over the past year are all sustainable ones, just hard to trade tactically.
Mark, it's a big week in terms of data out of the US, inflation data, jobs data. What for you is going to be top of mind?
I'm quite bullish the US economy this year. I'm quite bullish the global economy this year, quite bullish global stocks. One of the dynamics we've talked about a lot, though, is that the overpricing in the short term versus the underlying fundamentals are quite positive for risk assets. It's with that in mind that even though I'm relatively positive the US economy, I fear that this week's data set is going to be quite stagflationary impulse. So I think the short-term negative is quite poor, where the jobs data we've seen so far for January is very negative, and yet it's unlikely that inflation is going to be particularly soft. So I think it's going to be a red herring stagflationary signal that we're going to play over the next week. And I think that's partially why I think this week's going to be very tough for risk assets.